Hey guys, welcome back to another episode of Not Financial Advice. My name is Sean, and on today's episode, my portfolio has reached an important milestone, sitting at $70,500. We're going to get into it right after this.
You need to diversify your bonds.
The only problem you're gonna have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, guys, make sure to hit like on the video and subscribe to the channel. And today is late in the afternoon, about an hour left until market closes, Friday, February 2nd, 2024. And what we're going to be doing today is taking a look at my entire investment portfolio. But if you are new here or not one of my subscribers who's friends and family, allow me to introduce myself. Again, like I said, my name is Sean. I'm a 33-year-old investor. Someone whose investment journey started like a lot of yours in early 2021. When I heard that the government was sending us stimulus checks, I knew that that was my chance, my opportunity to start investing in my future. And from that point, that's really dictated the course of my life and changed its trajectory over these last 3 years, which has been an incredible period of study and research and learning and hope and fear and greed. And, I've come to this place today because of where I started, not only in early 2021, but also as someone who grew up, lower middle class, uh, you know, without a college degree, right? And so when those first checks arrived, I did something that was a little different. I spent 4, 6, 8, 10, 12 plus hours a day doing nothing for a year, but studying the stock market, learning about finance, economics, valuations, portfolio strategy, position sizing, growth versus value, et cetera, so on and so forth. And unlike some, I didn't buy any crypto coins and I didn't buy any meme stocks. No AMC, no GME, no GameStop for me, right? But in my studies, I found great minds who I've modeled myself after. People I look up to, like Warren Buffett, Charlie Munger, Peter Lynch, and Jack Bogle. And learning from all those great minds, that has me at a place where I'm proud and humbled to call myself a value investor. And that's what I hope to accomplish on this channel is whether you're 50 years old or 15 years old. Um, I feel that, with some of my experience and insights, I can provide you with financial education and information, entertainment, few laughs. Um, and as always, if there's a stock or an ETF you'd like for me to review, I've got access to the data and the tools to do a 10 or 15-minute video for you. And I'll even give you an estimate of what I think it's worth. So if you want to take advantage of that, you can just drop a ticker symbol in the comment below and I'd be more than pleased to do that for you. So I'll ask you to like and subscribe to the video. But before we start diving into, how the portfolio is doing today and overall time, I'm going to share a little bit more about me, a little bit more on a personal level. So, you know, um, for about the last 15 or so years, I've had a background in sales and politics. And, you know, this has been a crazy couple years for everyone, myself involved. And more recently, I was employed by a technology company, a bigger one that you would know, and I won't name. The only hint is they're not contained within my investments here for various reasons I'll briefly touch on. But, like I said, I'm 33. And as an after effect of a lifetime of questionable decisions and the pandemic, I live with my parents. Not only that, but I quit my job out of a place of privilege and principle because I didn't feel good about what I was doing and who I was doing it to. And, that's as much as I want to say about that. But I'm embarking on this journey and I'm glad that you're here. Uh, because, I've always been a little bit of a contrarian, and it's to be determined over the long arch of my life how well that's going to pay off for me. But what I'll say is this: in studying stocks and business and finance, one thing that I stumbled across is that we're in the first part of human history where you can start a business with zero capital and unlimited upside potential, which is in fact content creation. And so, I've made my value proposition to you. Another part of it is you're going to be able to see my portfolio, all of it, 100% of my investments, not only on massive green days like today, but on the red ones as well. And, a little bit more about why you should listen to me, but also understand that this is not financial advice, as I have no formal background in this. Um, and, I'm not saying that I'm a great investor. I certainly don't think I'm a bad one. But I've been tracking this portfolio since November 21st of 2023. And in that time, my portfolio is up about 11.4%. The S&P 500 is up about 9.4%. And so I've got too many portfolios and too many different brokerage accounts. But, what I can say is this: I think I did okay in 2021. I know that I lagged big time in 2022. I believe that I outperformed in 2023. And so far for 2024, I am. And so the mission statement for this channel as well is that I seek to outperform the S&P 500 reliably within my first 5 years of investing. And so that gives me until spring of 2026, and I'm bringing you along for the journey. At that point, if I am not, producing better results, better than market results, I'm going to go straight index, 100%. Vanguard Total World Index, and I'm going to dollar cost average and never look at it again. And it'll be a cool half decade of my life I'll look back on fondly, and one that ultimately will pay dividends. But with that being said, a little bit more about, where this journey has taken me, and how I've started. So, I'll share this quick anecdote before we get into it. But I'm going to tell you something I've learned is that you never make investment decisions based on fear or politics or macroeconomics, and it's something actually that my parents did. In late 2020, they were nervous about the election, and frankly, one of my parents doesn't understand at the time didn't understand investments, and one of my other parents felt that it was a very taboo private subject. But after studying for 3 and 6 months, they came to me and asked me to take a look at how everything was going with their nest egg as they were approaching retirement. And I found that in late 2020, they logged on to their broker where they kept their 401k, and they went 50% into bonds. As we now know, 2022 was the worst year for bonds in decades, and a 60/40 or 50/50 bond and equity portfolio performed worse than it had in 40 to 50 or 60 years in 2022, down massively. And I went in there very carefully. I was very honored and took it very seriously, but I did some things that no one agreed with and no one validated. Took them from 50% bonds down to only 20% bonds. And throughout 2022, I was able to maintain the value of their retirement portfolio. And then in early 2023, one of my parents, the main breadwinner, was forced into an early retirement. And I can happily report to you that they are able to live not extravagantly, but safely and comfortable off of the interest, off of the dividends. And I'm so proud of that. But it's one thing to just talk about investments or to invest other people's money, but I'm someone who puts his money where his mouth is. And so let's talk about my money. We're going to get into it. We're getting into it right now. So yeah, let's take a look. I'll ask you to like the video and subscribe to the channel. And I'm going to talk to you about the portfolio. There's 68 investments in there. Another thing that I learned, if you want to outperform the market, you got to do something than the market, and you probably have to be more concentrated than it. And I'm certainly do that. But there's others who say you should have 8 or 10 or 12 investments, and I don't agree. but that's okay. And so, you know, with that in mind, having 68 investments, my portfolio is pretty diversified. And on a given day, I can really get my finger on the pulse of how the market's doing. And today's no different. So, as we often start off here at Not Financial Advice, we're going to go through my top 5 gainers as well as my bottom 5 decliners of the day. Again, Friday, February 2nd, 2024. So, let's dive in. And starting us off for our top 5 stocks of the day, we have Seneca Food Corp, which is up 2.25%. Caterpillar is up 2.8. Mexican Coca-Cola is up 5%. Amazon is up 7.3%. And Meta Platforms or Facebook is up a staggering 20% today. Now let's take a look at my bottom 5 decliners on the day. So, starting us off, we have Vertex Pharmaceuticals, which is down 1.95% today. We have Curaleaf Holdings down 1.99. We have Domino's Pizza down 2%. We have Green Thumb Industries down 2.4 and Trulieve down 2.7. So now what I want to do is I want to switch the view that we have on my portfolio, uh, sorting by total value, highest value, and then total gains. And we're going to go through my top 10 holdings and then also sort of tell a story arc about how my investment has gone and different changes that I've made, things of that nature. So let's get into it. My top investment as far as position sizing is going to be the Fidelity Total Market Index Fund. It's a mutual fund. It's essentially like Vanguard's VTI, that ETF. It's a total U.S. market fund. And so this is one I started buying in late 2022 with my aforementioned job. It's up 16% all time, which is good for $2,000 in gains, a $14,700 position. Next, we have Amazon, one of my first and biggest conviction single stock holdings. Funnily enough, great earnings report yesterday. Today is my first time that I am up on it in all overall times. So I'm up all time at 3.3%, which is good for $206 of gains. All came today. Total value $6,500. Feeling super optimistic about this company long term. Then I have Winnebago. I've held this as long as Amazon. It's been a pretty boring story in stock, about $2,100 there. Pretty much flat, but up about 2.4% or $50 overall time. Next, we have Vanguard Small Cap Value. And in my studies, what I learned is that um, small and value stocks trade at a premium. In the last 15 years or so, they've returned an average of about 11.5% a year, actually better than the overall market. And so while I have the total US market, which skews large cap growth, I barbell that with VBR, which I consider a core part of my portfolio, which here skews a bit more mid and small cap value. And so I'm up $150 on that. I've only been in it for about a year or less, but it's 8% and it's a total of $2,000 of value. Next is a really high conviction single stock I own, Netflix. I have $1,950 of shares. I'm up a nice 67%. That's good for an awesome return of $780. So next we have Smith and Wesson. Smith and Wesson is one that I've owned for as long as Amazon and Winnebago, and it's been one that's been pretty choppy. So it's down 38% or $1,100, $1,200. I've got $2,000 of stock right now. It's trading for 13. I think it's closer to a value of 20, and it pays a really nice, safe, high starting dividend yield. Now, a note on this. Another thing that I learned throughout this investing journey of mine is that your risk tolerance level is probably 1.5 notches less than you think it was, right? And so why do I mention that? At one time, I was down 45% on Amazon. Now, I didn't sell, which was good, but I didn't have the confidence to buy more. And what I did do instead is I invested in companies like Netflix, which have done really well, and Google. So that's just an aside. But Google is an $1,800 position. I'm up 11% or $180. So, like the video, subscribe to the channel. Let's see what else we can see. So, as far as doing things differently than the market, I have Williams Sonoma. And going back to Peter Lynch, he says you have to have an edge in investing. And as I've described my life journey, my life story to you, what is my edge? I don't really have one, except for the fact that as an American by default, I'm a consumer. I know consumer brands, be them discretionary or defensive. And what I saw in Williams Sonoma is a company that sells $450 cast iron skillets to rich ladies. And I got a good feeling about it. And so far, it's proved to be a very profitable investment. I own $1,800 of stock. I'm up 40%, which is good for about $500 in gains. So we have Visa, a story of a stock where I get paid every time someone swipes. If inflation goes up, I still get paid the same percentage. Great balance sheet. And then I'm going to touch on just these last three here before we sort of skim through. But Mexican Coke. So I followed Buffett's lead, but I bought Mexican Coke at the same valuation as he bought his shares in 1982, except I bought the stuff with sugar cane in a glass bottle because it tastes better anyway. And that worked out well for me. This international brand, Mexican Coke, ticker symbol KOF, good for $600 in gains, up 66%, a current value of $1,500. Now, another stock, Coinbase, one of my top 20 holdings. Um, Another thing that I've learned and I'm sharing with you, when people are mining for gold, sell picks and shovels. And so, as I said at the outset of the video, I didn't buy Bitcoin. I didn't buy meme stocks, but I did buy Coinbase because in owning this company, I make money not only when someone buys Bitcoin, but also when they panic sell it. And now we're essentially the landlord for companies like BlackRock and Fidelity, who host their Bitcoin ETFs at Coinbase headquarters. And so that ties into another aspect, which is my superpower. My biggest weakness is my largest strength, which is that I am stubborn and I do not sell. I'm going to link to my investment video on coffee can investing, which in so many words is a concept that if you buy 50 decent stocks and wait 50 years, okay, you're going to have a handful of them that 5 or 10x. You'll have a handful of them that go to zero, and the rest will do pretty all right. And so that philosophy of coffee can investing is that if you never sell and let your winners win, that ultimately you're going to do very well. And the reason I mention that is, I've got $1,500 of stock here. I'm up $540, which is great. I'm up 62%, which is massive, but I've been up as much as $150 and I don't sell. I don't take profit because I'm not where I want to be at in life. So what would I look like doing that? But yeah, Coinbase. I like the stock. So we also have Salesforce. Now that was one that I used at my tech job. Um, it's some software that companies use to sell things to clients. It's used by 80% of the Fortune 500. Yeah, so I won't say too much more about that, but those are some of my top holdings. And so, I also own an index fund or an ETF VUG, which owns a lot of these growth names like Amazon. That's how I dollar cost averaged tepidly back into Amazon when I was down 45%. I bought VUG, Vanguard Growth Index Fund. I contributed towards the total US market, which contained Amazon. I use dividends from Smith & Wesson to buy Amazon. And I found that my tolerance level, well, pretty freaking high, being 100% invested in equities 100% of the time. I found that my tolerance level, necessitated sort of this level of diversification. And I'm really happy with where I started and where I'm at. So, going through this, what I'm going to do now is I'm going to go through my investments and I'm just going to pause at each page. And you can click pause so you can study my amount of shares that I own, how much I'm up or down. And if there's any of these stocks you have a question about, just drop a comment in the comment section below. Or if there's a stock here you see that you'd like to learn a bit more about, feel free to ask me to make a video for you on it. Use the ticker symbol that you see on the left-hand side of the screen. Drop it in the comments. I'd do a video for you. So we've paused here. This is your chance to study what we've just pretty much gone over. Let's go down to the next page, and you can do the same thing and take a look at some of my other position sizing overall time over the last 3 years. Okay, so you can pause here. This is your chance. We're going to go down another page together. All right. And so I think we just have one more page left. You can click pause on the screen if you want to look at some of these different ticker symbols to get some ideas for yourself, see how much I'm up or down. And last chance, we're going to look at the last page together now. Before we scroll down there, if you're with me still, I appreciate you. Like the video, subscribe to the channel. You're able to pause here. And this should just be about it. All right, and those are the last 4 investments. Here, 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 and here. So you can pause real quick if you want to take a look at those. So, here's how we're going to wind this video down. Portfolio is doing pretty good. Everything's looking great. I want to sort of tell you about, the arc of this for me personally, right? So I'm going to leave the video with this. We see 3 investments. Let's see if I can find them. The first one I want to talk with you guys about is going to be Home Depot. There it is. So when I first started investing, I didn't realize that I needed to invest looking forward. And so in late 2021, obviously we all know what the world was like at that time. So I bought a lot of 3 companies, 4 companies really: Home Depot, Casey's General Store, um, Dollar General, and Kroger's. And so I sold out of those and got into Amazon and Smith and Wesson and Winnebago, which I think over the next 10 years are going to give me better returns than these would have. But it's just sort of a story about position sizing. So at one point, I had about $2,000 of most of these stocks, but I bought back in, and I'm glad that I sold these. This is the $600 of profit I took that I told you about, but I have, $500 of Home Depot, made a nice little chunk of money on it. Same story for Casey's. This is one that I wish I would have held. I'm up really big on it. Casey's General Store in the Midwest, if you know, you know, but I'm up about 25%. This is the one that got away, but it's going to have to be all right. And then you also have, like I mentioned to you, Dollar General. Let's see where Dollar General is. Dollar General is one that it was good that I got out of it. I had $2,000 of it. It's had a drawdown of 50%. Um, and so I'm actively trying to buy back into it, but I've got about $570, $60 of it now, and I'm down about 13%. And then there's Kroger's. A good stock, but one that I didn't need to be one of my top holdings. So up 4%, pays a nice dividend. And that's really it. So we've gone through all of this together. I hope that you've enjoyed this video as much as I've enjoyed making it for you. And again, if there are any stocks or ETFs you'd like for me to review, feel free to drop that ticker symbol in the comments below. And if you stuck with me this whole time, thanks so much. Again, I'm Sean. This is not financial advice, and I will see you on the next one.